Directors and Officers Liability Insurance, often called D&O Insurance, is a form of Management Liability Insurance. In the small and medium-sized business market, it's regularly packaged with two other management liability forms to form a single policy called a Management Liability Portfolio Policy. Those two other forms of coverage are employment practice liability and fiduciary liability. Today I want to focus just on the D&O insurance since it's a commonly misunderstood coverage form. D&O insurance protects the personal assets of directors, officers, managers, and supervisors for the potential liability they assume in their roles in a company for errors, mistakes, breaches of duty, neglect, omissions, misstatements, or misleading statements. That is, broadly speaking, the definition of a wrongful act, which is what a D&O policy covers. So why should a company consider buying D&O insurance? D&O is essential to protecting entrepreneurs for the risks they face in operating their businesses. It doesn't matter if your firm is a startup with just a few employees or a mature stage firm with a few hundred employees, D&O is important coverage. My firm is seeking investment capital. Why is D&O essential? It is common for investors to require firms to have or to purchase D&O insurance prior to them making an investment. If you're seeking investment capital, having D&O insurance in place before a funding round makes a lot of sense. It tells the investment community you are serious and that they are protected. What does a D&O policy actually cover? I've gone into this question in more detail, and you can see that video here. But in simple terms, a D&O policy has three sides to it, and those sides are normally identified as side A, B, and C. Side A covers the company's insured persons, the D's and O's, for claims where the company is unable to indemnify those persons. That inability to indemnify may be caused by the company's bylaws, or most commonly, the company can't provide indemnification due to insolvency. The good news is that Side A or Part A claims are not subject to a retention. Side B covers the company for its indemnification obligations and reimburses it for those sums spent on protecting directors and officers. Side B is subject to a retention. Side C is also known as entity coverage and covers the company itself for certain claims where the company is named as a defendant. Extensions of coverage. As I mentioned earlier, many private companies purchase D&O policies in a portfolio manner, and they broaden their basic policy to include employment practice liability, which will cover the directors and officers from claims alleging wrongful employment acts, such as discrimination, harassment, wrongful termination, hostile work environment, and more. They'll also include fiduciary liability, which will protect the trustees of any ERISA-based plan the company has, such as a 401k program. This protects the trustees from claims which allege a breach of a fiduciary duty under ERISA. You can see more about fiduciary liability insurance here. What are the risks? Entrepreneurs live and work in a fast-paced world. Decisions are often made in split seconds, and while leadership always tries to do best, mistakes will happen. The mistake could be inconsequential, it could be significant. If it's significant and affects earnings, customer relationships, regulatory standards, or your firm's relationships with creditors or investors, you may suffer a lawsuit as a result. No one is immune from accidentally making a mistake, an error, a misstatement, or an unintentional misleading statement. It happens. The consequence is what you can't control, and the potential claim costs, legal expenses, settlements, fines, and penalties could sink the company and your leaders' personal assets. To me, it's not worth the risk. How do you obtain D&O insurance? Generally, an application is going to be needed at some point of the process, so we advise doing that up front. We take some of the pain out of that by deploying a unique smart form portal for our clients, but an app is needed. Also required will be financial statements for established firms, pro forma statements, and/or a budget for startups. If you have investors, a cap table will be helpful, and in some cases, your investor pitch deck will be asked for. For employment practice coverage, we'll also need a copy of your employee handbook as well. From there, we go to market, solicit proposals from various underwriters, and to be frank, it may take up to 2 weeks to get a quote back. If you're under pressure, we've accommodated rush projects in the past, no problem. How much does D&O insurance cost? That's really a tough one to answer because it's different for every industry, different company sizes, life stages, and the limits purchased. But for example purposes, we recently wrote a tech startup with zero revenue and about $5 million in funding. The limits were $1 million and the premium was $4,500. Another recent placement was for a financial services firm with 25 million AUM, and the D&O was combined with E&O insurance. The limit was $1 million and the annual premium was $15,000. A mid-market firm with annual revenue in the $25 million ballpark purchased a $1 million policy and the premium was $7,500. Here's the bottom line. D&O insurance is critically important for startups and growing businesses of all sizes. The coverage it provides is not provided under any other policy form your company is purchasing. I've mentioned it a couple times. Your owners, officers, directors, and managers are putting their personal assets on the line if a claim occurs and if they're caught in the crosshairs. It's just too risky to not have protection. Have other questions or issues regarding D&O insurance or any other form of business insurance? Why not give me a call or drop me an email? My contact info is coming up in a second, and I work across the country. Hey, and if you like this video, give me a thumbs up and hit subscribe. Thanks.